21st Century Entrepreneurship with Martin Piskarik.
What we do that's very different is the fact that we believe in a business wealth cycle. We love to help our entrepreneurs understand their numbers. And the business wealth cycle is basically 4 steps. Understanding your numbers so you can understand how to make money, keeping the money away from the government, and effective tax planning and minimizing taxes. Typically, we'll save our average savings for our business owners is 40% reduction in tax. Then we help them reinvest those savings back into the business to grow their profitability. And then we help them make other investments to enhance their financial security. And if you think of that wealth cycle and in putting that in place every single year, it grows their wealth and it really becomes like an upward spiral, right? Instead of spiraling down, you're spiraling up and growing your wealth higher and higher and higher. So my name is Peter Holtz. I am a CPA and certified tax planner. I've been a CPA for almost 40 years. I am in a business that is, a lot of people look at it as very old school. And a lot of CPAs are basically box fillers, okay? You give them your numbers every year, but they put the numbers on the boxes of tax returns, and they tell you how much to pay and when to pay. They don't do anything to help you save money on taxes. They don't suggest procedures. They don't understand your business, which is the key, is understanding your business and what you can absolutely write off every single year. It's really, really important. And what we love to do is understand your business and get you on the business wealth cycle so that you can maximize the profits in your business, keep those profits away from the government, and continue to reinvest your money, which is the most important part of those profits. I mean, you got to think about it too. If you don't do tax planning, up to 50% of your profits can go to the government. And then you have half what you should have to reinvest in your business and grow it for yourself, for your family, and for your legacy. Most of the time when you retain a CPA as an entrepreneur, you're not really getting a chief financial officer. But most entrepreneurs, especially when they're starting out, and especially as they're growing their business, really need somebody with that level of knowledge and talent, that CFO level, to help you understand where your profits are, where they're coming from, what you should do next, what strategies you should put in place, and also then how those strategies interact with tax planning and how those strategies can help you save money on taxes. Most of the time, we have achieved big results, the best results on tax planning, when we integrate this business strategy with the tax strategy. Should you be an S Corp? Should you be a C Corp? Should you be an LLC? Should you be a sole proprietorship? What does your partner do, whether it's your husband or wife? Are you paying your kids? Are you using the Augusta rule? Are you using every single loophole you possibly can to maximize the cash in your pocket? Because every entrepreneur has that creative edge to use every dollar from their business to reinvest in their business. And it can be something that can be the best of things, and it can be the worst of things if they're not investing in the right things. Got to understand your business first. You've got to understand where your profits are coming from. The key to that, and business is very, very easy. You figure out what to do that makes you money, and you do it over and over and over again. This is how all businesses work. You figure out what's making you money, you figure out what your margins are and where the margin is coming from. Meaning, if you could buy whatever widget for $10 and sell it for $15, you make $5 each time. If you sell enough of them, you make enough money to cover your overhead. Margin is the key. And starting with really having timely, actionable clarity on what your margins are is the most important thing in business. Because if you don't know that, you're flailing. You're heading this way, that way. You're chasing every single other bright, shiny object that's out there to try to make your business grow and go. But really, where are your margins coming from? How are you making money? And I'm very, very fortunate, I think, because I generally am a very visual person. I think in pictures, and I can or envision or visualize, whatever. I think I combined those two words. I envision business process, right? And I've seen so many different businesses after 40 years of being in business that I really understand how most businesses work and where their margins are coming from, right? Um, and if you find a way to generate margin and you got to find the volume to generate the margin, right? Um, and really, that volume is a function of the market that you're participating in. You got margin, you have volume, you generate enough money to go cover your overhead. And then the fourth thing that you get out of that whole process is the profits. Those things that you get to hold on to and keep to grow your business moving forward. Then, if you take those profits and you keep it in your pocket instead of giving 50% of the way to the government, your growth process, if you really think about reinvesting in your business, if you have twice the money and the government doesn't take 50%, you have twice the money. If you have twice the money to reinvest in your successful business that you already understand, now you're able to grow and create more wealth, right? Because now you can grow twice the rate because you have twice the money. You cannot exit without good numbers, right? You cannot exit without good results. If you're not making any money, nobody wants to buy your business, right? If you're not in a good growing market, nobody wants to buy your business. And you could say you should think about this all the time, or you should think about it when you're ready. And the answer is yes, you should. It's both are really true. Like, what do you want to do with your life? Some people get into business because they want to pursue their passion, right? Let's say they're a restaurateur. They love to cook. They love to create a food and enjoyable experiences and works of art really for their customers, right? And they want to become successful at it, okay? And they may want to someday retire and create the systems and the process that somebody else can take on and then they can exit, or they want to sell their brand or whatever. Let's say you have somebody like an Emerald Villa, right? Or who's the guy who does Spago? I don't remember his Wolfgang Puck, right? Wolfgang Puck is not working at every restaurant with his name on it, right? He's creating the process, but yet he's inspired by the art of what he does. So at some point, he will be able to exit somehow, or maybe he's done a partial exit already by getting other investors and he gets a piece of the action essentially for his name continuing, right? So there's so many different ways to cut up that whole, am I going to exit? Am I going to create a long-term value where I don't have to work? You know what I mean? I will just get a piece of the profits for whatever. I could sell it all at once. I could take a royalty forever, or there's so many different ways to do things. It's really, really amazing about business. But the number one thing is you've got to make money, and the number two thing is you've got to create, and you make money by creating value for your clients and your customers, right? And the number two thing is, in order to do that, you need money. In order to do that, you have to minimize your taxes, right? You got to have the right numbers. You've got to be able to show your investors the numbers, and you want to minimize taxes so you can grow those numbers, okay? In the tax side of things, to talk about that, I talked about box fillers, and I talk about the real danger and of so many people in my profession as accountants and CPAs. They view themselves really as compliance experts, taking your numbers, not even understanding the numbers, but putting them in the boxes of the tax return to get them filed on time and tell you how much to pay and when to pay. That is not a service. That is a compliance. I mean, you're required to do it. But believe it or not, I have seen CPAs prepare tax returns for gas stations that have no assets on them. Okay. And how do you have a gas station with no assets? How do you have any business with no assets? I've seen restaurants with no kitchen on the tax return. I mean, it's just so many ridiculous things that I've seen because they people, when they view themselves as a box filler, they just don't think about what do the numbers mean, okay? And when you look at a tax return and you see something like that, it is funny. You laugh a little bit and you think, "Oh my God, how stupid can you be?" But it is because of the fact that people are thinking so hard about getting the boxes filled in correctly, they don't think about the business. So many people never write off their vehicles when they should because they may have. I had a guy last week, multiple pizza locations. Him and his wife are working in the business, and they never wrote off their cars that they use to travel from place multi location to location. It's a cost of doing business, and it's like their previous CPA didn't even bring it up, right? So there are so many different things you can do. The key is understanding your business. The key is understanding your business strategy and weaving that into your overall strategy for everything else you do in your business. I think with the advent of AI and everything that's going on, I have sometimes people that come to me and they're like, "Well, I put this into ChatGPT, and ChatGPT says this, or Claude says this, or whatever AI tool has." But what you have to understand right now with AI and everything that it does, it's an averaging technology, okay? And AI is going to go out and scan the internet, right? And figure out what's out there. And it's going to average what the average response is. And a lot of the detail that it's going to get to is the Internal Revenue Service websites. Okay. So if you want to just listen to what the IRS has to say about whether or not you can write something off or whether or not that write off is justified, believe it or not, the IRS is not going to tell you it's justified. It is anytime you take a write off, it's a legal position that you need to take based on evidence, and it's based on judgment. And as of now, AI is not capable of judgment. It's capable of averaging things. And certainly, and every time you get a response on tax planning or tax issues from ChatGPT or any other AI tool, it's going to say, check with your tax advisor because it's complicated, okay? Because it involves human judgment, because it involves actually dealing with somebody that sat in front of the Internal Revenue Service and has gone through an audit and understands the audit process to justify your position. And you know, ChatGPT cannot tell you whether you should take the allowance, the mileage allowance on your car, or you should take the actual costs on your car. But a competent tax advisor who is a tax planner who understands your business can tell you which one to take, usually at the drop of a hat. It's usually a very interesting and quick analysis, but ChatGPT can't tell you that. ChatGPT will tell you your answers and will tell you to check with the tax advisor. I mean, it's a good source of income on basic tools. Like if you want to ask the question, how much can I put into a 401k this year? How much can I put into an IRA this year? That's all good. That's fine. But when it comes to what kind of 401k should I have? Should I have a self-directed 401k? Should I have a simple IRA? Should I do a Roth IRA? Should I do a cash balance plan? What should I do? That's a function of what your business is, what your numbers are this year, what you expect your numbers and your profits going to be in the next 2 years, and what they've been in the last year. So it is a complicated judgment and series of evaluating specific facts that would really be important and really out of the reach of AI at this point. And it could be, and the problem is, in order to make that judgment, you need to understand what all the factors are. And it's like you have to ask ChatGPT, what are all the factors I should be considering? Then you need to go find all those factors and put it into ChatGPT to try to make it consider it. And believe it or not, it's just a tool right now. It's a tool that you tell what to do. If you don't tell it what to do, if you don't tell it exactly what to do, you're not going to get the right answer. our positioning really is we really work with people when they exceed $1 million in revenue, or they have profitability above $500,000. Okay, that's really where we can deliver the most value. I mean, we can do some basic stuff for people that are getting started, and of course, most startups are losing money in the beginning. Okay, and what's important when they lose money is that they keep track of their losses, because their losses are loss carry forwards they get to write off against future profits. So it's very important they do that basic bookkeeping, that basic accounting. That's relatively easy. When it comes to strategy, when it comes to things that where we can deliver the most value, it's when people exceed $1 million in revenue or $500,000 in profit. Then we can really start to help them strategize their business and maximize their tax savings. Typically, we save people 40%. That's our average. And we can also help people not only structure themselves for tax savings, but also structure themselves for leverage. That is, being able to go to the bank to borrow money to do their next thing and their next thing and their next thing. It's very, very important that they have somebody that is not just that box filler, right? That person that throws the numbers in the boxes. It's somebody that understands the financial workings of a business, and somebody that understands how to present those to a bank to get additional leverage. There's always going to be that important situation. And, it's another good reason why AI is not going to be your CFO, okay? Because banks will not accept ChatGPT as your CFO. They're going to want to know that there's somebody with judgment and somebody with financial acumen to really say your numbers are going to be this, that, or the other thing, right? And somebody that has an understanding, because the finances of a business are a whole separate language in itself. And to be able to talk to a bank about getting a loan, to be able to borrow money to leverage your business is absolutely critical. I will run into people even today who feel like, you know what, I am going to do everything on a cash basis. I won't report anything to the government ever, and I'll just keep all my money for myself. Well, what I've never seen is anybody that runs everything based on cash, like cash, cash, cash. I've never seen them be successful, because they never get their pricing correct, because they never track their numbers, and because they can never borrow any money to leverage themselves. Because, we talked about the margin before. The margin is so critical. And if you figure out what a good margin is, as a business owner, what you do is take that good margin producer and do it over and over and over again. And sometimes it takes you borrowing money to be able to do that over and over and over again. You've got to buy a new piece of equipment, another truck, buy into another market, or buy out a competitor. You need your numbers to be able to do that. So if you want to find out more about what we do and how we do it, we have a special website, go.peterholtzcpa.com/entrepreneurship. So go.peterholtzcpa, that's HOLTZ, CPA.com, entrepreneurship. And we have two things. We have a self-assessment PDF that you get for free that really lets you kind of do a self-assessment of your tax situation. Then it looks for blind spots, inefficiencies, misalignment of certain things that you're doing in your business. And the second component is you have the opportunity to sign up for a tax strategy meeting. So it's basically a free strategy meeting, a half an hour. If you meet our requirements, you have $1 million in revenue, $500,000 in profits, right? It's not any type of IRS audit or anything else like that. It's basically just a tax strategy meeting with one of our representatives to look at what your opportunities are. And if we go through this strategy meeting and we find out that you're probably a good fit for us, right? And we're a good fit for you, then what we would do is ask for your tax returns and do a complete free tax analysis for you to help you understand how we can save you money. We do nothing unless we can save you money, and we do nothing unless we can save you a multiple of what our costs are. Our business is always a positive ROI business that we work with our clients. If I can't save people a multiple of what my cost is to them, I won't do business. There's no other way to do it.
21st Century Entrepreneurship with Martin Piskarik.
Imagine a space where triumphs, trials, and tales of entrepreneurship come alive. Welcome to the 21st Century Entrepreneurship Podcast, a gold awarded journey hosted by Martin Piskarik, connecting with listeners in 95 countries and ranking in the top 0.5% of all podcasts. Join our exclusive community, elevate your perspective, and embark on the path to success.